Government will have to go to the domestic market to finance the colossal 1.4 trillion shilling 2012-2013 budget, with at least 81% of expenditure expected to be funded by taxes and borrowing. Treasury bills and other government paper will be where government will source from, according to analysts.
The revenues are going to go up with increased economic activity. Tax revenues will increase. There is that expectation. But I think it's going to be quite challenging if the economy doesn't pick up. What I then expect is that we will rely more on borrowings and go back to the to the bond markets for infrastructure bonds, for development expenditure. What I also expect is if we don't raise those funds or if we don't raise those revenues, then certain expenditures are not going to occur, or they will be very thinly spread out. So there is also that risk that might occur.
Recurrent expenditure is expected to eat up all tax revenues during this fiscal year, a trend that has persisted for the last 3 years. In this year's budget, recurrent expenditure stands at 1 trillion shillings compared to 451 billion for development. The government's attempts to tap into new taxable areas, such as roping in landlords into the tax net, will continue as it aims to reform the current tax regime to generate more revenue.
Landlords have always been subject to tax. It's only that there was no effective mechanism to ensure that all of them are paying taxes as they should. So it's not as if they're going to pay tax for the first time. They've always been under the obligation to pay tax. And it's simply that there was no simple mechanism to police that. So now with technology, KRA is able to tell, as long as any property has a registration number, KRA is able to trace that, is able to trace the owners, and therefore can enforce compliance to make sure that landlords pay taxes. Obviously, if they have not been paying taxes, that means their net income goes down. They may want to compensate themselves by hiking the rents.
Ultimately, PKF Kenya CEO Atul Shah warned that government must be cognizant of its spiraling spending as it is staring at a 1.3 trillion outstanding debt impacted by the devolution process, upcoming elections, and maintenance of ministries in the coming year. Tapping into new taxable areas and domestic borrowing will be some of the measures government will be taking to fund this year's 1.4 trillion shilling budget. However, financing a budget that is 25% higher than last year's in a new devolved government system will prove to be a challenge, especially if economic growth does not pick up to support it. For Capital FM News, I'm Victoria Rubadiri.